Hello, I'm Peter Towers, Managing Director and Founder of ESS BIZTOOLS. Welcome to this Accountant's Minute podcast, where we're going to examine the material that was contained within Accountant's Minute 395, Unlocking SME Growth, Why Advanced Strategies are a Game Changer. And they are indeed, aren't they? In today's fast-paced market, sustainability growth is more than just a goal. It's an absolute necessity. For businesses aiming to scale up, embedding systems within the business is very desirable. Some people believe that the scaling up process commences when the turnover is around $2 million. And that might be so, but I don't think that's when businesses should adopt the philosophy of embedding systems into their overall business apparatus. I think that should be encouraged to be inserted from the very beginning of the business. When you first undertake interviews with potential business operators, I think one of the reasons we have such a high level of failure in SMEs is that systems have not been approached on a serious basis. They are serious, they are necessary, they are important, and they will assist many of our clients not to get into financial difficulties, because there will be processes that have to be abided by. I've spoken a couple of times in these podcasts about the findings that MYOB found a year ago, which was publicised in an article in the Financial Review in February 2024, in which their CEO talked about some of the issues that had been discovered when they undertook a review of 1,000 SMEs. And they found that many of them had not appreciated how the debtor system works. Some of them had assumed that they had to give credit to anyone that walked in the door and asked for it. Others assumed that everyone would pay them within 30 days. That'd be lovely, wouldn't it? And they had no appreciation of the very important business metric, debtors' days outstanding, and the need to be ready to chase up debtors, to have the due date for payment stamped on the tax invoice, to have someone make a phone call 3, 4, 5 days prior to that due date, just to remind in a very courteous way that there was an upcoming date for a tax invoice to be paid. These matters that I've just mentioned are all part of a system. It should be written down, and responsibility for who is going to attend to those various tasks allocated. And that is that part of that person's role then. And if that person has problems in performing that, if they have trouble with the client or they get an adverse comment, well, they should be reporting that on to whoever they report to, which should be summarised in the system. Another very important comment that Mr. Robson, the CEO of MYOB, made was relating to suppliers. So apparently, quite a number of these businesses, when they started off, they decided who they were going to buy their key supplies from, but they did not negotiate what their payment terms would be. Otherwise, they wouldn't have got the quite significant shock that they got. And the shock was that when they placed their order, they were asked to make a payment equivalent to the value of that order into the supplier's bank account. In other words, cash with order. Apparently, they didn't know that this might happen to them because they prepared their cash flow forecasts on the assumption that they would be offered 30 days. Isn't everyone offered 30-day credit? It was obviously their response to the MYOB interviewers conducting the review. What this highlights is that there was no system approach to determining what businesses should do when they're planning on starting a business, or indeed if they're already in business and they're thinking about switching from one supplier to another. Do they make contact and get a written agreement as to what their payment arrangements will be? The system would have said they should have done that, wouldn't it? So these are two fairly simple items. But what was the outcome of this? Because obviously this happened on both occasions to some of these businesses that were being interviewed. They had misunderstood the debtor system, and unfortunately, their credit customers were not paying them on an average of 30 days. It had blown out significantly higher. I think in the system, you should make note that Australia's got one of the highest, if not the highest. We had the highest a few years ago. Whether it's slightly changed, I'm not sure, but I don't notice that it has. Debtors' days outstanding in the world. When that decision was made by some organisation in London, the then Australian Small Business Ombudsman, Kate Carnell, called it a national disgrace. And the Morrison government introduced some legislation to make it mandatory that government departments, both state and federal, and councils, local government council, make payments within 30 days. And also started working towards some legislation for the bigger companies, turnovers over $100 million. And the current Albanese government has recently brought in some more legislation, which will name and shame large corporations who are not paying SMEs within 30 days. Now, the jury's out as to whether that's going to make any difference, whether that's going to create a far better environment on debtor payments. But the key thing is, none of this information was obviously conveyed to these new people going into business. In some respects, I hope that they had not got advice from an accountancy firm or a bookkeeping firm as to what they might encounter in a business activity. Because as advisors, we need to make sure that people are aware of these things and that we have implemented systems that we are prepared to make available to them. Now, obviously, it's part of the package of services that you're going to supply. And one of the other key packages and the key system is the business plan. And I know thousands of businesses will not agree to have a business plan prepared because they're worried about what it might cost. But the cost that they encounter is, in many cases, is business failure because they haven't thought these issues through. But getting back to the MYOB research, the next area, of course, that I mentioned was suppliers. Suppliers were looking, in some cases, for payments up front. So you can imagine what's gone wrong in the cash flow. The suppliers are demanding payment with order or within 7 days or perhaps on delivery, whichever way it was. It wasn't giving these new accounts 30 days to pay. They had to pay up straight away. So they wanted to get some supplies. They had their premises they would lease. They bought their plant and equipment. They probably hired staff. And they had to get supplies. So they had to accept those terms. And this is obviously all part of the environment in which we're all working at present. There's been a lot of suppliers caught by people not being able to pay them. So they're making it tough on new customers, whether they're just starting off in a business or even switching from one supplier to another. And can you blame them? The second part of the cash flow problem was that they'd assumed that everyone would pay them in 30 days. Now, when Australia won the dubious award I referred to earlier, it was indicated that debtors' days outstanding for Australia had been calculated at 58 days, nearly double the normal 30-day term. So if these businesses that had been surveyed had run into that, they may well have had debtors' days outstanding of 50, 60, 70 days. And that would have caused a few problems in their cash flow forecast. And this come to a head, apparently, for the new businesses after about 6 months, because the other major organisation in business cash flow is the tax office. And the tax office is nowhere near as lenient as what they were during the COVID years. I read somewhere recently that the tax office have estimated that they're owed $35 billion by SMEs, and they're putting pressure on to get that money in. Because the way the government's spending money, they need it, don't they? So the crunch came about 6 months later because of the problems with having to pay suppliers up front, with having to wait for debtors to pay, and then the tax office is looking for the payments of income tax deducted from employees' wages, superannuation, and perhaps other things. So that's caused a lot of problems. The power of systems in scaling up is very important. Vern Harnish, the American who is the author of Scaling Up, and Scaling Up is based on the work that was done nearly 100 years ago by John Rockefeller, one of the founders of a major oil dynasty in the United States, who wrote detailed system notes for his team members over 100 years ago. Some years ago, Vern Harnish was doing some research and found all these notes, the books that had been written by Rockefeller, and decided to bring them up to date. The culture of computers, of being able to communicate by Zoom, of fast-growing companies, and built them as being applicable to gazelles, fast-growing companies. And in America, they can grow fast and grow very large turnovers. But I think the adaptation of systems that Vern Harnish advocates can be used for all types of business. It doesn't have to be gazelles that are going from $1 or $2 million to $100 million turnover in 3 or 4 years. It can be any business. All businesses need systems. And they need not be as detailed as what Vern Harnish has identified in his book, but we need systems. And we've identified a few of them already, haven't we, in this little conversation? Debtors, suppliers, payments to the tax office all require systems. The discipline of the cash flow requires a system. In that businesses should make sure that they have got confirmation of payment terms. And if you're preparing cash flow forecasts and budgets for people going into business, I think your system should say, if you got the letter from the suppliers you're going to use, and I think you should be insisting on seeing that, unless the client's saying to you, we're going to pay cash on order, which I don't think too many people are voluntarily going to be talking about doing. So if they're assuming that they're going to be able to pay even 21 days, 30 days later, I'd be really suggesting they get that in writing. And they should all have a business plan. Now, it doesn't have to be 100 pages long. It might only be 15 to 20 pages, but it'd be about that long, looking at how they're going to run this business. What's the working hours? Who's going to be responsible for opening the business, closing the business? Who's going to be responsible for working on Saturdays and Sundays if it's a business that trades on weekends? Or is there night work involved? Have they thought this through? How is it going to affect their routine, their family? Because I don't think a lot of people think all these things through. I had a client years ago who had been he's now passed on, but he'd been the CEO of a fairly large company, a public company. It was a family type business. And he retired and he bought a business. And he turned up into my office looking very relaxed and told me he'd also bought a brand new boat, spent a lot of money for that boat, and that he wanted to know if I wanted to go sailing with him in a couple of days' time. I said, no, I've got appointments, thanks. And geez, that's only a Thursday. He said, oh, that's all right. I'm going to spend half my week sailing and the other half I'll work in the shop. Well, that man got into some difficulties very quickly, even though he'd been the CEO of a public company. And he had not understood the systems. Because one of the things he misunderstood, and I found since that a number of people misunderstand the difference between markups and gross profit percentages. So he was using a figure that he'd found out was a gross profit percentage as a markup. No, he wasn't pricing his products correctly. And he rang me and said, can you come out to my business where I've got a problem? My bank balance is going down. And I thought I'd done everything correct. So when I got there, I went into this, it was a grocery type store. And I walked around and had a look, and I knew a couple of the staff. I knew them. They were in the golf club that I was a member of. And when I realised what was happening, I said, didn't you tell him that he had very cheap products that he was selling? And they said, oh, he's not very polite. He doesn't think anyone can advise him. He told us a few times he's been the CEO of a public company. So we thought he might have been smarter than us, but we didn't quite figure out how. Now, this was because he hadn't implemented a system. And when I talked to him about implementing systems, in the very first time I spoke to him, he basically said to me, I understand all this. But then he admitted to me that in the past, of course, he had internal accountants who were doing all this planning and thinking. He did the entertaining. So we need to make sure that our clients have got all this worked out within the systems for the business. Vern Harnish tells us that the key systems are strategy, execution, and cash. And he emphasises cash. You've got to have cash to be able to run a business, but you also need strategies and you need methodologies on how you're going to execute them and get them started. The other issues that I want you to think about is, what are the essential business systems for every SME? I think you first of all need to clearly understand how the business operates. And you need to know a lot more information than what you probably know if your traditional roles being the preparation of the business's annual accounts and the income tax return. You need a lot more if you're undertaking a virtual chief financial officer role, if you're going to be helping the business week in, week out. So that you need to know it an inch wide, but a mile deep. Whereas currently you probably know it a mile wide, but only an inch deep. You need to dig down. You need to know, what's their internal control system like? What's the risk for this business? Have they got policies for the risk? Have they got systems for the risk? Who's authorised to purchase on behalf of the business? Who's allocated the responsibility of checking that the purchases come in, that the business is getting what they're paying for, the right quality, the right quantity, the price that was quoted? Who's watching the debtors and really making sure debtors' days outstanding is under control? There's a whole range of issues that you need to understand. I think you need to make sure that there is ongoing business evaluation occurring in the business. We suggest that one of the key aspects of the 52-week business enhancement system is the weekly performance report and result. Yes, a profit and loss account prepared each week for each operation. That's what the big end of town do. That's how they control their businesses. They utilise their internal accountants. Within 2 days of the end of a week, they know what the result was, what the gross profit percentage was, or whatever other key indicator they've got for how that business should have performed. And if they find that their gross profit percentage was only 22% in one of their operations and they had budgeted that it would be 38%, they investigate why that's occurred. Now, why do they do this? It's part of the system, of course, that they've got to do it. But why? They're trying to make sure that whatever caused that hiccup, that problem, is identified and fixed so that it doesn't continue to occur. What does your SME client do? They're very busy. They trade for the week. The thought of doing a stock take or determining the value of stock at the end of the week is not a very popular outcome, especially if they've been working all week and it's Saturday 1:30 and all they want to do is go and have a quiet ale across the road in a pub. And the system says there's a stock take that's got to be done. And as the manager needs to be there to supervise it. Mightn't be actually doing it. One of their team is. It needs to be done properly. Because we need to get proper results. And then the accountant analyses that, prepares the report so that the supervising manager in that business can analyse it. This is what happens in Woolworths and Coles and IGA stores and probably hundreds, if not thousands of others around Australia at the big end of town. That's the system used throughout the Australian meat industry and probably the worldwide meat industry and a lot of other industries. The big end of town know their results so that they can immediately find out what went wrong and fix it. What happens to your clients? They have a problem this week. They might not even know they didn't achieve 38%. They might not have really locked in that that's what they had to achieve. They were just trading and something went wrong. There could have been fraud. There could have been overcharging on invoices. There could have been something else went wrong. Someone did the calculations wrong and they just lock them into the system and they're going to continue to do those calculations wrong for the rest of the year. And we might be in week number 1. We've got 51 weeks to go. Is this error going to be repeated every week for 51 weeks? Because who's going to find it? Please think about your clients who are they're all running businesses. And there's all sorts of errors could be occurring each week. Who do you think is going to find it? One of the giveaways can be the bank balance, but there's all sorts of things going on in bank balances, and a busy owner or manager of a business might not quite twig to that because you've got debtors, you've got creditors, you've got other things interfering with the cash balance, haven't you? In my observation, it doesn't get noticed. I've conducted a number of major investigations over the years into what caused results to go wrong. And invariably what I found is that all of the businesses in one profit and loss account. I hate that. I did before I ran into this major problem in a business that I was brought in to undertake the review. And I really hate it after getting involved in that business because I went in a business that had been trading quite well. And suddenly their results had dropped. And I mean significantly dropped. They were running at a loss, whereas the expectation was their profit should have been up over $1.5 million and they're trading at a loss. And there's only 2 months to go in the financial year. What's gone wrong? So I go into this business and I sit down and I say, well, what's the chart? Show me what you're operating. I already knew. I made some inquiries that they had far more than one business and they had 19, I think it was, businesses plus the office, so 20 separate And I said, well, what financial results? And I got given the annual financial accounts. I said, no. You got detailed information on each of these activities? No, the accountants didn't want to do that. And this is the problem when accountants are concentrating on tax returns. Sure, it made sense, I suppose, to consolidate it all for tax. It doesn't for management. The system should be to make sure it's prepared on an individual business unit. So we sat down and started saying, well, we're going to go back and analyse 19 businesses to find out which one's causing the problem, because one's obviously causing the problem, one or two or three. Someone's causing this problem, unless there's massive fraud. So fraud was in the back of my mind, because this business had a fairly big turnover, as you can imagine. We're thinking they might make $1.5 million pre-tax. Turnover was pretty high. They had quite a number of employees. And so we started working through it. Thank goodness the bookkeeper had details of what the income was for these 19 separate businesses, week by week, month by month. She'd kept that because she had been arguing that there should have been separate profit and loss accounts prepared. But the CEO didn't want that. I don't know why, but he didn't want it. So we started working through it. This took a week of solid work, working very long hours at night. And we discovered a major issue. Now, to cut to the chase, what the issue was that this business had a transport company, quite a big transport operation, and they were going on very long trips, carting a particular product, about 650 kilometres each way these trucks were travelling, and they had 14 of them delivering. So we did this analysis and said, well, this is where your problem is. Now, this happened to be the favourite of the CEO, which went over like a lead balloon. This was where your problem was. And I told him that at about 9:30, 9:45 one night. And he said, okay, we'll be there bright and early in the morning. I'll call the team together at 6 a.m. So I turned up there at 10 to 6, and there's cars everywhere and people everywhere. I think the whole workforce had been called in. And then I said, how long you blokes been here? They talked to me about 4:30, 5 a.m. So they got there bright and early because they got these phone calls. So we started what's changed? And some guy at the back rather timidly put up his hand and said, you changed your invoicing when we had to change the route, did you? And the CEO said, what are you talking about? What are you talking about? And this was what had happened. The main roads department had ruled out one of the bridges they used to cross on this long journey. So they had to divert, added nearly 300 kilometres to the trip, I was told, there and back. They couldn't go over this bridge. They were over the Tearweight or something. 14 trucks a day going backwards and forwards. That's where the problem was. The invoices hadn't been changed. Everyone had assumed that someone had told whoever raised the invoices. When I spoke to the guy who was actually running that business, he admitted to me he didn't actually know who raised the invoices. And the control of this business was such that it was all coming back to the CEO. And he didn't know. I've never seen someone so surprised in all my life that this had happened. They contacted their customer who said, we've been wondering when you were going to change the invoices. But they didn't offer to pay in arrears. They just accepted the new charges from there on. A system would have helped sort that out. The knowledge of saying we need to analyse our performance on individual business units weekly and then monthly so that we're clearly looking at the results, because that would have been very obvious, wouldn't it? It would have occurred in that first week. How come we're losing so much money in this week? I hope that you can think about this, because I think this is the key to systems. We need to make sure that we're talking to our clients about implementing systems that impose some control, that set off some flares if something gets changed and what appears to be a wrong result starts being determined. Now, you might have let it go for a week and say, oh, we can't find, but you would have sorted it out in the following week, wouldn't you? Because we were talking about a significant amount of money that was being lost. And obviously it would have been showing up in these profit and loss estimates on a week-by-week basis. Now, I call them estimates because you will never get it 100% accurate doing a weekly profitability report. There are some overheads you've got to guess a bit and put them into the system, but you can get fairly accurate at it. I did it in a major meat company. I was the chief financial officer. Our aim was to get 98% accurate, but we used to be very proud of ourselves sometimes. And I said, we're at 101. And the CEO said, well, don't go getting too smart. I don't want you going up, building too much up your sleeve. I want to know the result, good or bad, so that I can do something about it. But I don't want to be sick, having a party thinking we're going very well and find out it's wrong. So you've got to make sure you work pretty carefully. But if you get a system working, it gives you the results. So hopefully this gives you an overview of the need for businesses to have systems. 99% of SMEs are not going to introduce these systems themselves. They need your input. This is the key role, the management accounting role that accountants can play with their clients. Please go back to what I asked you to do a few minutes ago. Think about your key clients. How would they have known about this problem that I just gave you an overview? Obviously, that particular business did find out what was happening because the bank balance was the thing that started to suffer. And it was the bank that had asked some questions, and undoubtedly it was why I was there, because I'd negotiated an arrangement which the bank had agreed to fund. But the signs finally appeared, but this was some 6.5 months after the change, that the truck routes had been changed. So no one was looking at key performance indicators, were they? Because the petrol usage in the trucks, the tyre usage on the trucks, there were all sorts of indicators there when we started going back through looking at it. But no one was observing that. It was all happening in their big workshop, but it wasn't being reported. It wasn't being analysed. It was just, oh, well, the owner wanders around here all the time. Surely he's taking notice. That's not the way systems should work. Systems should produce information that your client can sit down with some figures. This is what the figure is, and this is what it should have been. And very quickly, there will be some action. So thank you very much for joining us for this overview on systems, which is all part of Accountant's Minute edition 395, Unlocking SME Growth, Why Advanced Strategies Are a Game Changer. If you've got any questions or comments, or you'd like to know more about how ESS BIZTOOLS can assist you to implement these types of systems, please contact us. You can send me an email if you want to have a complimentary Zoom meeting with me, peter@essbiztools.com.au, or give me a phone call, 0418 190 181. Have a great day. Goodbye.